following is a technical analysis on Meta Platforms Incorporated, a company of the technology sector and internet content and information, here off the Daily Interval. And in my previous video discussing the potential short trade setup on Tesla, I had mentioned the app Threads and its potential impact on the stock. However, despite what I initially believed to be a red hot release, recent data has shown a completely different picture. And according to CNBC, engagement on the app has significantly dropped, with daily users down 20% from Saturday and user time crashing by a whopping 50%. And it seems I might have been the gullible one who bought into its initial hype. It's certainly possible that the media played a significant role in creating a frenzy all around the app, almost like a Twitter killer story with the aim of attacking Elon and the company. Looking back, it's pretty evident that this might have been another instance of a falling for another CNN trick. And it's essential to remain vigilant and critical with the stock market and media, as mainstream media landscape can be full of surprises. And being well informed is crucial to making the next sound potential trade idea and or decision. So I'll deep dive straight in the data. This is right off the Bloomberg terminal of Twitter killer story count all. This is where Threads had launched right on the 5th of June here. Explosive moves there in just the Twitter killer story count. Now move on to Google Trends here, whereas you'll see here the interest has completely plummeted here within the recent days, and just a huge strong divergence between the two, an all-out decoupling method there. And then what I wanted to take you out to was a little bit more significant, was the recent data through the Gallup polls, whereas by no means am I despise, by no means am I trying to ruffle any feathers. I despise both parties equally, but it's significant and engaging, whereas I view Twitter as more of a moderate, sort of more so on the conservative side, whereas Facebook and or Threads may be pushing to the left side of the political arena there. And so I looked up Gallup, and this was a recent poll that just had come out here. And again, just a huge divergence where you have a worldwide view on these social issues with what the population and or mass completely have a strength in which belief they are. And we've seen a complete decoupling now since Joe Biden and the administration has taken over here around this range. And you have the liberal standoff just falling off now, looking like it's going to break this support level here of that 29% there, and potential go down here. And again, that this is just constructed to the potential mechanisms behind each one of these apps here. And so, this could even looks like it's about to take off as well. You had right here, you had a huge steep decline. Right, where was it? Oh, 2008. That's where I wanted to show you. You had that liberal view here, and you had a huge uptick right here around that financial crisis. And that's when the world blew up. That's when the debt mattered there. And then you had a huge progressive liberal percentage just falling off a cliff there. Found out huge bailouts, the system worked out, and then you had another upcline here. But again, anyways, I'm getting way ahead of myself here. We'll deep dive straight into the charts here. You understand, you get where I'm coming from here as far as what I believe to be the winner, the potential winner in this renewal of a trend that's starting to happen in this decoupling between the left and right political arena, where majority are starting to lean to the conservative side, where you had these huge economic blowouts, and you could be witnessing the same things here with potential inflationary pressures and whatnot. But we'll deep dive into this technical structure of the stock, and we are at just a monumental key inflection point right off this 316.71 price resistance. I'll call it gap resistance, top of the gap here, right off of the 2022 off that crash. I believe it was an earnings crash there. Big old gap there, and that is a key inflection point where it looks like we're beginning the stages of a potential back test and or retest. Nice big divergent high. These are huge, steep, big divergences, really constructed on all three technical momentum indicators. Whereas you have that green oscillator histogram, hill starting to churn, potentially churned at the downside there. But again, this would be an aggressive, taking an aggressive entry short trade setup, and you could potentially start to pile in now, right having the scale in. Whereas that gap resistance, where bull traders, long traders want to see a solid pop above there, 5%, start to potential re-challenge some of these big divergences. You don't want to be short too long in the stock, whereas you're going to want to take out and burn out these divergences and hold out for those divergences. You do have that bullish crossover here, but again, like I say, some of these key technical momentum indicator inflection points can usually have a direct result in another move to the downside. You can begin scaling in here if you're a more conservative trader. Then you might be waiting patiently for a big break below that 298.38 price support there coincides with this primary reactionary uptrend line off the November 2022 reactionary lows, with a multitude of reactionary lows to help strengthen the validation of that inflection point there. Huge volume profile drop off around that range as well, where anything could be possible. But bear traders, short sellers, they want to say solid daily counter close and snap this primary uptrend line here for even a potential small counter trend rally, if anything, down to that second target at 276.32. Price support for 9.3% crash, which will coincide with the 50 exponential and 50-day moving average. Call it a dual line of support. Down to 258.94 for 15.5% crash, which will undercut that 50-day moving average. And then if anything happens on that scale, I will begin to definitely keep you updated, potentially down to 244.65. And an all-out big backfill of the gap there, and an unchecked gap there for a 30% crash, down to 212.69 if things start to look really bad for the app. We all know what happened with the weakening aspect of metaverse, and that was an entire flop there. Do not underestimate how quickly things can change in an all-out flop on a heavily levered investment within the company. Oh, these are your key inflection points to watch, key levels to watch. If you're a strong believer in Meta, obviously these are some big key inflection points, big levels to watch for dollar cost averaging. But again, I am here for the short trade setup, potential short trade setup. If and when we get some of these key levels, I will again, this is an aggressive scale in. You can start to scale in quarter and or half position for that first target, if not the bottom of that trend line for a 3.2% drop, versus starting to scale out, maybe on a backfill, complete backfill to the top of this gap where that wick ends up ending out there. Again, you just have to measure some of these targets, 5% versus that secondary target for a 10.2% crash, which is a great 2-to-1 risk reward ratio there. But we'll see what happens. I'll keep you updated if I see any significance in the charts, but this is as bearish as you can get, as a huge rising bearish wedge pattern that I have noted earlier throughout the month or so ago, where I had mentioned that stock, but it never broke down. We ended up back testing it, and bull traders, long traders ended up successfully defending this primary uptrend line multiple times here, and it never broke down. And I would have issued a sell signal for you if we did break down, and we never got that definitive breakdown, and we have just waiting patiently here like a hot zone with shark infested waters.